and welcome. You're watching MF Corner. I'm Sumaira Abdi. The juggernaut of passive funds in India continues in full force. Month after month, quarter after quarter, the assets continue to pile up. At a little over 6 lakh crores of the nearly 40 lakh crore mutual fund industry in India, it today accounts for about 15% of all the assets under management. But consider the growth. This share has almost doubled in just the last 1 year, when passives formed a little over 8% of the market. And with the strict reclassification of active funds by SEBI in 2018, it is only the passive space now, and within it specifically the ETF basket, where there is any scope for innovation left. So why is thematic innovation important? As an investor, is there an edge that it can give you? How have global investors reacted to this? Joining me today are Berruga, CEO of GlobalX, and Swarup Mohanty, CEO of irae Asset Investment Managers India. GlobalX is a part of the irae Asset Financial Group, one of their ETF arms, their largest ETF arm, if I'm to say, with presence all over the world and currently managing assets of $545 billion as of June end. So thank you very much, gentlemen, for joining in. And Louis, especially to you for coming down to India and for speaking to us. So, I was going through your website and I saw your tagline which said beyond ordinary ETFs. But, in India, ETFs are not yet ordinary, right? I mean, Swarup will tell you that we're still trying to popularize it, and therefore your opinion becomes more important. So wanted to understand first up that, what is the global setup for ETFs, particularly thematic ETFs, looking like now? How has the growth been? What are the trends which are shaping up now? And what's doing well?
Great question, and thank you so much for having me. It's a true pleasure to be here with you today. So we see two main global trends going on right now. One is obviously the growth of the ETF industry. As you may know, in 2021, we crossed over $10 trillion in assets globally. And the other trend that we see is the growth in thematic investing. Just in the US, 5 years ago, there were only like $5 billion tracking thematic ETFs. That number today is $120 billion. So that growth in the ETF industry, which we expect that it's going to continue to increase over the coming years, and the growth in thematic investing, two very powerful trends. More specifically, some of the trends in which we are very interested in right now are cybersecurity and electric vehicles. Cybersecurity, I think, is obvious, right? More devices connected to the internet, great, but more points of vulnerability. Even some of the geopolitical factors that we are dealing with right now, Russia and Ukraine, even China and the US, continue to emphasize the need for more cybersecurity. And if you just look at the projections, our numbers indicate that in the next 5 years, there should be around $1.75 trillion in global cybersecurity spending. So the numbers are very, very significant. And when it comes to electric vehicles, we just see many catalysts for further adoption. So you have regulatory support, the cost of electric batteries continues to go down, even the charging network and infrastructure just continues to improve. So we think these are all factors that will drive adoption of electric vehicles even further. And quite frankly, it's still very early stages. Look at electric car sales in 2021 double, but they're still only 9% of total car sales. So we do think the trend for ETFs, thematic investing, and specifically cybersecurity and electric vehicles are very significant.
But thematic investing is a very niche market, right? Why are you focused mostly on themes? I mean, is it the market for the regular ETF saturated? What is the thought behind this emphasis on thematic investing?
Great question. So innovation is just part of the DNA of GlobalX. Our company was founded in 2008 by two entrepreneurs in New York, and it was very difficult to compete with the largest asset managers in the world. As you know, it's a very competitive space. So since the very beginning, the DNA of GlobalX has been around innovation. And that's why we are widely considered the leaders in thematic investing. We launched the very first thematic ETF in the US, our GlobalX lithium and battery technology, back in 2010. We now offer 36 thematic ETF strategies in the US, more than any other ETF issuer, and we manage over $20 billion in assets just in thematic ETFs. But what is the rationale behind that? It's very simple. We have a high degree of conviction that the traditional way in which investors invest, looking at historical data to predict future returns, is not enough. The world is changing at a pace that we have never seen at any point in history before. That's why we think investing with an eye into the future is particularly important in today's environment. And that's why I think thematic investing is a very powerful tool for our clients' portfolios.
Okay, but and I'm speaking from the perspective of the Indian market, is that we have in normal circumstances a flood of NFOs, right, new fund offers, and there is this feeling that there is a lot of innovation happening for the sake of innovation, maybe to launch new funds, because this is where there is space available. So is there a lot of innovation happening just for the sake of innovation? I mean, what has been the success of the new themes that you have launched?
I honestly think it's just because innovation is just happening at the fastest pace that we have seen in history. Why? I think it's access to the internet, cell phones. I think normal people just have access to much more information than they ever did before in any point of history. So I don't think it's innovation for the sake of innovation. It's that I truly believe innovation is happening everywhere and faster than ever before. So that's a key element of why I think it's still a very relevant part of clients' portfolios. And then the other aspect to when it comes to the success rate, well, personally, from a product development standpoint, we take a very disciplined, data-driven approach to thematic investing and to bringing new innovative ETFs to market. We look at conviction, investability, and time horizon. So we look at companies and areas of the economy where we have a high degree of conviction. So we look at target addressable market, the maturity of the technology, the regulatory framework. Then we look at whether or not there are enough companies that we can actually invest effectively in that particular theme. And then we're only interested in those themes that have a long-term scope in nature. So we are not interested in something that's going to be popular for 2 or 3 years. We're literally looking for like disruptive shifts in the economy that will have an impact over decades. And in terms of the track record, even I think like a year ago, we launched our GlobalX blockchain ETF and our GlobalX hydrogen ETF. I think it was roughly a year ago, July of 2021. And we've already raised over $100 million in those strategies. And that's in the context of a very volatile market environment. So we do think there continues to be appetite for thematic ETFs, and innovation is just happening very, very fast.
Yeah, and in the one of the busiest markets in the world also, right?
Yeah.
Okay, but Swarup, how ripe is the Indian market to accept these kind of themes? I know you've had success with some of the thematic ETFs that you have launched already, but what is the scope for so many new themes to come in?
Sumira, first of all, thank you for having Luis and me together. It's so special to be sitting here with Luis in front of you. But yeah, what Luis said is very important, that, when you look at thematic investing, it's about the future. And there's this saying that, you invest in the future, in your future by investing in the future. And that's what thematic investing is. And when you look at traditional investing in India, and that happens across the world, one graduates over a period of time, that you typically look at past returns to invest in your future strategies. But that's a complete deviation in thematic investing. There's no past data, actually. Look at their lithium 8 years ago. He's talking about blockchain, he's talking about hydrogen. There are things which will not come easily to India. But at the underlying, what is happening is the demography is changing. The new investor is a very different investor, connected on the phone to data, to information, like as on yesterday. I'll give you a small example. Like we launched BAF, and Luis, BAF is probably the hottest category in India. We got 26,000 applications. We did Luis's EV and AI, and we got around 13,000 applications. So when you look at these two numbers from 26 to 13, from the perspective of your question, it is beginning to happen. And when you look at the younger lot coming in, and that will come in very quickly. We are seeing that in the numbers of penetration that we've seen in the last 1 year of the industry. We're adding 1 crore folios in the last 1 year over a base of 2 crores, approximately is 50% growth in 1 year. And bulk of that will be the young of India. We see that changing happening far quicker than what we think. Yes, traditionally, it's been a large cap, mid cap, morely the market cap investing. But when we launched our consumption 9 years ago, people made the same questions. Today, when you look at the broad themes of India, they've played out, whether consumption, pharma, or healthcare, or you look at financials, they've played out. But these futuristic mega trends is something which is at a threshold of breakaway. And I'm looking forward to working together because they are the leaders in bringing these mega trends into the world. And then once we introduce that, and yes, it will need some familiarity from the underlying investor. But once they catch on, the key is the dissemination of information from them to us, which is not very late or it's absolutely instant. The Indian market is fairly educated to take it forward, is our view.
Yeah, absolutely. Because see, right now the investor who is already aware of the themes and coming to you for an investment, I can imagine that that person is a willing investor. The problem is in reaching people who may not be aware, you know, because consumption, financials, the other themes which you mentioned are fairly well understood. But to reach the investor who is not aware, to make them aware of these themes, isn't that a big challenge for you?
Sumera, I've been watching your show, right? And when you look at the questions which come to your show from the hinterland of India, they no longer come as asking you from which is your best fund or whatever. They come very structured. Here's my goal. Here's my investment. What do I want? Earlier, I used to think whether these were doctored questions, very honestly, you know, but that's not so. So I'm a big fan of respecting the young Indians now. And not only young Indians, the investors of India. And please mark my words, this is not just India, across the world. COVID has changed the investing habits of everybody across the world. When you are, you know, sort of shifted to a near-death sort of situation, there is a flight to safety, and hence investments come to the fore. And we've seen that happening to India. There are enough people now studying what is happening and giving investing a far deeper thought than what used to happen just 2 years ago. So I am not ready to accept the fact that I need to reach out. We are reaching a position where they are doing their own thoughts, and the advisory and the distribution climate has also changed dramatically. So, see, there's a simple rule to this business. What is right for the investor is right for us. Right? And if these are the right trends globally, sooner or later, please don't underestimate the Indian brain on tracking it down.
Absolutely. I second that. So we're going to take a very quick break, but I have lots more to ask my two experts, so we'll be right back. Stay with us. Welcome back. You're watching MF Corner. With me today, I have Luis Berruga, CEO of GlobalX, and Swarup Mohanty, CEO of irae Asset Investment Managers India. We've been speaking about, thematic investing through the ETF route. So we've spoken a bit, fairly, a fair bit about the global trends, how they're shaping up and all. But Swarup, in India, one of the concerns remains that, we can't yet invest overseas through mutual funds. I understand that there is the ETF route, which is still open. But what is the kind of headroom there? I mean, for somebody who's watching and interested in these trends that we're talking about, is there even scope to invest currently?
Yeah, I mean, there are three aspects to this whole thing. The first one is the 7 billion, which was put in place for funds investing in through ETFs and other routes and actively otherwise. That has been exhausted. But there is the other route, which is the fund of fund investing abroad or in any other ETFs that is there. That is open for 1 billion, which is still completely unutilized. I would believe there is around 750 million still left there. So there is space there. Apart from that, investors today in India are free to take this same investing route through the LRS route, which is fairly substantial. So if one wants to invest, there is still space. Whichever way one wants to invest is available to them. They have to find their own route. But the one which is open now is the fund of fund route, which we've taken for the EV and AI for GlobalX products. And of course, the LRS is always open. And I do believe that there is a lot that is going to happen through the LRS route.
Okay. Luis, as an outsider to the Indian market currently, what has been your assessment of where things stand, and what do you think is going to be the inflection point for adoption of ETFs by the retail investors particularly?
Great question. I think the inflection point is going to be driven pretty much by the same factors that we have seen in the US and in other markets. So regulatory support, a transition to a fee-based model in wealth management, and a shift from active towards passive strategies. And we can already see early successes in the Indian market for ETFs coming from government mandates and pension plans. And also, to Swarup's earlier point, I wouldn't underestimate the power of the retail audience in the Indian market, because increasingly we are seeing more and more fintech platforms and robo-advisors that really serve a very good purpose from an investment standpoint, because they educate investors and they allow them in just a few clicks to have access to individual stocks and ETFs. And what we are seeing, or what we have seen at least in the US, but we expect a similar trend to happen in India as well, is that retail investors, they like ETFs because of the benefits of diversification, transparency, they can buy on an exchange, and also they like thematic investing because for a retail client, sometimes understanding like the new multi-factor ETF based on size, value, and momentum may be too difficult, but they understand cloud computing, they understand cybersecurity, they understand fintech, because these are tools that they are using every day. So if you combine fintech platforms with a greater financial education, because more and more investors in India have access through their cell phones to more market data than we were able to see like 10, 15, 20 years ago, right? So I do think those trends are really powerful tailwinds for the ETF industry in the Indian market.
Okay, that's good to hear. But, you know, India is still a market where active funds rule, right? And we've had this debate so often on active and passives. But there is scope still, right, for a developing economy for active funds to outperform. In that environment, you know, while passive funds are growing, there's no doubt, but can they become a big challenge to active funds, or is it going to be more like coexistence with passives being more like the country cousin?
Yes, Sumera, every time we discuss passive, this question automatically comes out. But look at it from the investor perspective. I do believe at this moment the Indian investor is spoiled for choice. There is enough acumen in the Indian active industry to outperform the benchmark. It's still there, and then the recent volatility in the market is actually giving them far more scope. But what's happened in India, let's understand, there is the categorization of funds, and that's put an end to probably the ideation of new ideas. Yeah. And look at ETFs. I mean, earlier when I started discussing ETFs, a lot of my knowledge on ETFs come from practicing it for 2-3 years now and listening to Luis and how their story has unfolded. Now I begin to understand, and this is something which Luis will agree with me, that ETF is a solution. And the beauty of the passive side is wherever there is an investing universe, you can create an index on it, you can create a fund, and through factors create multiple options of that fund.
If you can think it, then there's probably an ETF
there is an
for
ETF.
it.
Yes, and that's why there are so many possibilities, and that's why there are so many launches. Now again, I bring back my simple thinking, what is right for the investor is right for all of us. Now, the sole objective of the investor should be to construct a portfolio as per his or her goals and desires, as per the risk profile. And we believe at this moment there is scope for a mix of both. There are some very strong active managers there who you can have, whether you have it on the core side or the satellite side. It's up to the investor's portfolio. But there will be some fantastic ideas from the ETF side which you just cannot ignore. Look at EV. When you look at it, you probably look at the theme, but in your mind this is a 20-30 year unfolding theme going forward. You just have to pick it up early. And in India, people are selling, a manufacturer sells 10,000 cars because he or she is producing 10,000 cars, yeah. Right? That's the situation, and as this progresses from the cars to the entire ecosystem, we've seen that happening in consumption, healthcare, financials, and this is how it is. So it is a compelling story. Some of them will be to incorporate that in your portfolio. So our view is that, they will coexist. But at the end of the day, the investor's sole desire should be to construct a strong portfolio. And if you see the overall environment, a combination of both at this moment in India can give a portfolio far bigger strength. And that's what people should do, not get caught in the noise of whether it's active or not. So think of it from a very, very objective portfolio construction perspective.
Okay, so we've at least reached a point where ETFs, passive funds have nudged their way into the portfolio. Which part of the portfolio and the allocation remains to be seen, but it is now a part of the Indian portfolio.
The growth numbers are already showing, that you cannot say that they are not there in the industry. You yourself at the beginning of the show just talked about the growth.
Yeah, absolutely. So there is one final thing. You have spoken about blockchain, cybersecurity, EVs. Leave us with one more innovation that's in the works.
Great. Okay, so I think we have a high degree of conviction on the metaverse. it reminds me a little bit of when we launched our social media ETF back in 2011, which was the first social media ETF in the world. It's still very early stages, but we do see some similarities. And we did launch the social media ETF even before Facebook went public. And the reason why we are so optimistic about the metaverse is because it sits at the intersection of three very powerful themes: social media, video games and esports, and augmented and virtual reality. So I think that convergence of themes into the metaverse is a very powerful value proposition. And the numbers are there. If you look at year-to-date investments into the metaverse, has been over $120 billion. But even one more relevant data point is that 79% of active users in the metaverse have made a purchase. That's a really remarkable conversion rate that we haven't seen in many industries before. So we're still cautiously optimistic because it's still early stages, but we do have a very optimistic view long-term for the metaverse.
Okay, and I think there's an equally optimistic long-term view for passive funds, especially ETFs in India as well. So thank you very, very much, Swarup and Louis, for joining in. And, there you have it. It's mostly like a snowball effect, right? The snowball has started rolling down the hill and it's gathering momentum as it goes down. And probably there will come a time in India as well where you can't do without an ETF. And, that's the hope that retail investors will understand and encourage. Thank you very much for watching. I hope you enjoyed, and I hope this was a learning experience.